Hey, so I'm doing this video today because I keep running into buyers who want to buy and just can't because their FICO score, the evil FICO, is bad. And so here's just a few tips to bring up your FICO score. I've been a financial planner since 2001, and one of the ways that I got into financial planning was because I was buying real estate at age 19 because I believed in saving money and investing, and I had excellent credit. I borrowed early. I had credit cards at 18. The second they would give me one, I'd been working since 12, so I saved up a bunch of money, and I was interviewing financial planners, got recruited by one, and that's what got me in the industry. But in any case, my point today, financial planning, FICO scores, credit, all these things to help you have healthy financial situations and have ability to buy. So how do you get your FICO score up? So one way is you've got to have limited number of inquiries. So anytime you're going to shop for a car, don't let them pull your credit until you're absolutely certain you want to buy that car. Because if you have your credit inquired, it's like a ding. It hurts your credit. It drops it. So limit your inquiries. Also, number two, there's a lot of times there's errors on people's credit. So get a report. When you check your own credit, it's not a ding. There's no impact, negative. So check your credit annually, research it, make sure there's nothing in that's not correct on there, because you might be associated with someone who has a similar name, a parent, if you're a junior, something like that. So check for errors. You can easily write a letter, send it in. They can improve your credit overnight. Second, nope, I'm on the third point. Third, collateralized loans are better than unsecured debt. Also, installment loans like a car. Now, within reason, I don't mean go out and get a $900 a month payment, but car loans are called secured collateralized debt. And so if you have like this installment loan where you pay the same amount every single month, that's actually a good thing, and it can increase your credit. And because it's based upon collateral of the vehicle itself, it's also good for your credit. So within reason, it's better to have a car payment than it is to have unsecured credit card debt. Also, take your biggest monthly payment on whatever debt you have, whether it's school loans or a credit card, whichever requires the most monthly payment, pay that one off first. This might not make sense. You might think, pay the one that has the highest interest. Actually, I don't believe that. I think you need to pay the one that has the greatest monthly payment. The reason being, it will free up as much cash flow as possible. The moment you pay that off, your cash flow will immediately feel the impact. It's going to be freed up. Also, it will affect your debt to income ratio when you're going to buy a house. It will look like you can afford more money, so you're using other people's money to buy this house, which is great, because in property you want to leverage as much as possible. So you'll be able to borrow more because your monthly obligations are now reduced. So pay off the one that has the highest monthly minimum payment first. So there's just a few tips to maximizing your credit score. Last and definitely not least, this one I think is the most important, and a lot of people don't know it. Never borrow more than 30% of your available credit, ever. So this means if you have a $10,000 limit on your credit card, never borrow more than $3,000. Even if you have a home equity loan, this is kind of tricky. Still, don't borrow more than 30% of your available credit, because it will negatively impact your credit score. The people that have the best credit scores get the best interest rates. You don't want to pay people more than you have to. So it'll increase your borrowability. It'll increase your ability to leverage, to acquire properties, to invest. It'll increase your ability to borrow in your business, and all around, being able to borrow is a really good thing. That's how expansion occurs. Just within reason and purchasing things that are productive for you, not destructive. I'm out. Thanks.